Hey, welcome back to Crypto Skillet. In this video, we're going to be taking a look at a new project called Fortunas Finance. Now, this is a really interesting project because it essentially allows you to choose your own APY depending on your risk tolerance. And it has a uniquely gamified system that allows you to choose your own strategy. So if you're more comfortable with a low risk investing style, then you will receive a lower APY. And if you opt for a higher risk investment style, you can receive a higher APY and more rewards. So I'm going to cover exactly how all this works and tell you everything you need to know if you want to get in on Fortunas Finance. But first, I've got to say, none of this is financial advice. I am not a financial advisor. I'm just a guy on YouTube sharing my thoughts, experiences, and opinions. So always do your own research and invest at your own risk. Now, with that said, let's get into it. So here is the main website for Fortunas Finance. And you see here it says, control your destiny, command your returns. The only protocol that gives you the power to directly increase your return on investment, truly rewarding long-time holders while ensuring long-term sustainability. Now, what Fortunas is all about. It says it's the first ever decentralized rewards protocol, or DRP. Fortunas Finance is building a smart DeFi ecosystem, one that has a fundamental grasp on the principle of supply and demand. Gone are the days of Ponzi-nomics. Every Fortunas Finance investor requires contributing resources in order to generate cash flow. By using a smart risk-reward structure, we are building an exciting protocol that will reward holders for years to come, all while building multiple revenue streams and garnering investor trust. Choose your destiny. Fortunas Finance allows you to choose your APY. With our unique DRP protocol, you can now tailor your strategy based on your risk tolerance, be it aiming for a safe return or risking time and resources to fight for higher returns. Sustainable APY. Our high APY is reserved only for strategic and dedicated investors. This prevents whales from hoarding tokens passively and crashing the protocol whenever they feel like it. Our protocol also ensures that the APY is sustainable for many months to come, as only the best investors will be able to achieve a high return on investment. Now here they list the benefits for the holders, and they say why we're different. True long-term reward. In Fortunas Finance, a high APY can only be earned through long-term holding and clever resource management. This gives whales a major incentive to hold and buy rations while reserving the high yield for the most dedicated investors. They have an independent treasury. They say in most protocols, the treasury will be invested elsewhere in order to generate revenue for the protocol. This puts the protocol at the mercy of other projects. However, Fortunas Finance's treasury will mainly consist of BUSD, which will be used to grow the protocol, and volatility resistance LP. The Fortuna token will be paired with BUSD in the liquidity pool instead of BNB. This prevents Fortuna from being affected by the volatility of BNB during bear markets. So that's really cool. I like that it's paired with BUSD. That should certainly make it much less volatile than it would be if it was paired with BNB. Now they have a locked liquidity pool. The Fortuna BUSD liquidity pool will be locked for 1 year. This makes the project rug-proof, proving that we intend on keeping our promise and building for the long term. And it's an anti-dumping protocol. Unlike other rebasing protocols, Fortunas Finance's smart contract will not have a built-in dumping mechanism. Fortunas Finance treasury will only consist of BNB/BUSD from the buy fees and Fortuna tokens from the sell fees. And they have automatic daily burning. In order to sustain your APY, investors are required to purchase rations to keep their Fortuna tokens in battle. All Fortuna tokens used to purchase rations will be burnt in order to reduce the total circulatory supply, keeping the protocol healthy. Now here is a summary of how it works. So they offer two different types of rewards. They have guaranteed APYs and variable APYs, and you get to pick and choose based on your own risk tolerance. So Fortunas Finance offers 6 different ways to allocate your Fortuna tokens, each with a different APY and risk profile. The higher the variable APY, the harder it is to win your rebases, and the more time it takes to reach the maximum APY. So here you see they have 6 options, and they have them named in very creative ways that fits with their whole Roman theme. And they have a note here that options 1 and 2 that have the lower APYs are guaranteed APYs. And then options 3 through 6, which have the higher APYs, are variable APYs. So you see for option 1, it starts at 150% APY. The second option is 520% APY. Then the third option is 25,031% APY. The fourth option is 32,687% APY. The fifth option is 93,965% APY. And the sixth option is 137,045% APY. And again, options 3 through 6 are variable, and options 1 and 2 are fixed. Now they say, if you've selected to fight a Roman enemy, meaning options 3 through 6, after the third day, your soldiers, which is what they're calling your Fortuna tokens, require rations to continue the battle. If your soldiers aren't provided rations, they retreat back to your castle, aka your wallet, and you lose the progress you made in the battle. Your returns increase by 0.5% every day that you stay in the battle. So this is encouraging you to keep your tokens or your soldiers in the battle. And then they have a little graphical representation where they say with no rations, the soldiers surrender and go back to the castle, hence rewards are diminished. Now with these rations, rewards will increase by 0.5% every day the soldiers are in battle. Okay, and you can purchase up to 5 days of rations at a time and no more. Food spoils if it's not used within a short period of time, and rations work the same way. And here they have a little breakdown of how that works. So for 1 extra day, 0.25% of staked Fortuna plus rewards. 2 extra days is 0.5% of staked Fortuna and rewards. 3 extra days is 0.75%, 4 extra days is 1%, and 5 extra days is 1.25%. Now this is really cool. They say, don't want to wait? You can increase your returns instantly with our NFT upgrades. Heroes and Cavalry levels 1 through 5. Their cost is based on the amount of pooled Fortuna tokens. So essentially you can boost your APY by upgrading your army with these NFT upgrades. And they have a breakdown here of how that works. Depending on which NFT upgrades you get, you will get a different amount of boost to your rewards. Now, once you reach the maximum APY for a war, rations increase by 12.5% per day. This increase ensures that investors aren't able to collect rewards forever and keeps the protocol healthy. Most wars' profitability end in about 20 to 30 days after reaching their max APY. This system is designed to reward strategic planning. It is also designed to sustain the high APY by rewarding only the most dedicated investors, fixing the mistakes made by rebasing protocols that precede it. And then once you've completed the war, you can start another one and start collecting more rewards again. Now let's take a look at their DApp design. I really like this. They say our DApp is designed with simplicity and elegance in mind, tailored to suit our Roman theme. Our professional development team built our DApp to be a one-stop shop for everything Fortunas finance. Managing investments, tracking prices, and buying up rations are all a few clicks away on our gorgeous and easy to understand layout design. Our DApp also provides all the stats you need to make intelligent decisions, so you can maximize the potential of every Fortuna token residing in your wallet. And then they have some screenshots here of what their DApp is going to look like. And this has a very unique and very cool look to it, which you can see here. Now here they have their roadmap. So they start with the user interface design, the UI development, smart contracts. The private sale start date was on July the 1st. And then they started their integrations on the 2nd. Mid to late July is QA and testing plus audit. Late July, go, no go. Now the fair launch start date is going to be in early August, and the launch is going to be early to mid-August. So there's still plenty of time before the launch. So if we look at the founder and CEO, Luke Tull, he is a 7-figure e-commerce business owner, expert full-stack coder, and veteran IT professional with more than 10 years of experience leading and executing successful projects. Appalled by the state of DeFi, he vowed to create a project that solves DeFi's greatest flaws. And then they have some information about the development team, Queco Inc., and the head of marketing as well. Now let's take a look at the white paper. So in their overview, they're basically just saying that this is the first ever decentralized rewards protocol that gives you more influence and control over your APY. And they're saying that with this protocol, they combine the best functionality and ideas from a variety of popular DeFi concepts, including nodes as a service, auto staking protocols, play to earn, and risk to earn. They say, we saw what was working and not working, and we're able to create something brand new that is more sustainable and scalable. Not a single one of these concepts has been successful in its own right due to a variety of factors, primarily having issues around sustainability and utility. The Fortunas protocol takes the best parts and concepts of each to create the most powerful protocol yet to be seen in DeFi. And they say our focus will be on utility and sustainability from the get-go while mixing in risk and luck. Unlike many other protocols, we will actually reward you for buying and holding the token. Your rewards get better every single day you participate. We encourage you to stay active and make sound strategic decisions to get the highest ROI possible. And yes, we will be offering one of the highest APYs yet to be seen in DeFi. However, what can make this sustainable is the fact that the APY isn't guaranteed right out of the gate. You'll have to support your investment and determine the best strategy based on your personal risk tolerance and acceptance. And now here under the Control Your Destiny section, they're just reiterating that the ROI is not fixed as it is in most rebase or staking protocols, that you, the holder, can control the APY, and they say they reserve the very highest rewards for the investors who carefully plan their strategies and manage their resources. Investors can dictate their returns through a variety of aspects, including but not limited to rations, war entry or exit, soldier additions and withdrawals, and upgrades. They say you can easily earn more Fortuna tokens by using our beautifully designed staking dApp. No, it's not a game. Fortunas Finance is an advanced and gamified staking platform built with sustainability and longevity in mind. Good news, you will automatically receive more Fortuna every 30 minutes by just holding them in your wallet. You can claim your rewards anytime you want on the dApp by clicking the Claim Holdings button. You can also get even better rewards when you stake your Fortuna in one of the 5 different staking options. You can stake against easier opponents to get fewer rewards quickly, or take some risk and go for bigger rewards that take longer to build. The beauty of Fortunas Finance is you get to choose, and you can be any or all options at once. Keep in mind you should have some tokens on hand because they will be required to stay staked and earn the high APYs in the wars. And you can unstake or leave the war / withdraw your soldiers to claim your rewards. So to participate, you will first have to acquire Fortuna tokens, which they're calling soldiers. Now it's up to you on how you would like to allocate your soldiers. They say you have many options, such as sending them to battle, which is taking risk for higher returns, or committing them to the Emperor for a more stable APY. Keep in mind that if your army is not as advanced or doesn't have many upgrades, you can still take on tougher opponents with higher APY, but you do have a higher chance of losing your rewards, at least at first. Please keep in mind that you cannot lose your original balance when fighting, only your rewards. So you have 6 different options to choose from when it comes to the APY, and I covered this earlier. So at option 1, it starts at 150% APY guaranteed, and that's just from letting the tokens sit in your wallet. And then as you advance up in the level of risk that you take, the APY gets higher, so it goes all the way to option 6 at the highest 137,045% variable APY. And so again, the first 2 options have a guaranteed APY, and then options 3 through 6 have a variable APY. And so for option 1, you're just letting the token sit in your wallet. For option 2, you're committing your troops to the Emperor quarters, or the liquidity pool. So you're committing your tokens to the liquidity pool, and you can get a 520% guaranteed APY there. Then it progressively gets riskier as you go through options 3 through 6 for a progressively higher and higher variable APY. And they have a note here saying the APY for the wars start at a lower rate. You will need to go to war for a period of time in order to achieve the marketed APY. The higher the APY, the longer it will take to achieve the maximum APY. And you can have different amount of troops participating in several battles at once. It is up to you to decide how and if you want to split your troops up or just have them fight in a single battle. Whenever you enter a battle, you are required to buy supplies. So that's 0.5% of your total Fortuna tokens or soldiers sent to the treasury. Now here they have an explanation of the rations. So they say, like any army, you must keep them well fed and stocked up on equipment. Your army can last about 3 days without any additional rations. What does this mean exactly? You can fight for up to 3 days before your army retreats from the battle. However, if you keep your troops at the battle for longer, your chances of collecting more Fortuna will increase by 0.5% every day. To make this happen, you must invest in rations for your army. Here are the options and breakdown for rations. So I covered this earlier. You have level 1 through 5, depending on how many extra days of rations you want to get. And that's going to range from 0.25% of allocated Fortuna plus rewards on level 1, all the way up to 1.25% of allocated Fortuna plus rewards at level 5. So essentially, the longer you keep your troops in battle, the higher APY you will end up receiving in the end, but you must determine what strategy best suits you. They say it is highly encouraged that you keep your army at the battle because if you are able to stand the test of time, you have the ability to collect 100% of the rewards that your army is fighting for. Now, once you are collecting 100% of rewards, your army will become exhausted and require more rations to stay in battle. Every day, the number of rations required to keep them in battle will increase by 12.5%. So for instance, on the first day of receiving all rewards, your ration amount will be 0.28125%. The next day will be 0.355957% of your balance, etc. So it continues to go up. Now, ending a war, they say once a war has ended, your Fortuna will be sent to a recovery camp. The total Fortuna sent will be your initial amount plus the rewards from the war. You can then claim your Fortuna, and this will send it back to your wallet. Do note that you cannot restart a war by paying rations. You will have to claim your Fortuna before recommitting them to a new war. Then they have the breakdown of how to boost your APY with these NFT upgrades. And I won't go through all of this. You can come here and read this breakdown where they tell you the percentage increase depending on which one of these you get. Now, there is a retreating penalty. It says, when retreating from a battle, your APY will drop back to the minimum amount, and the rewards plus your original Fortuna tokens will be sent back to your wallet. Secondly, early retreats run the risk of getting ambushed by the enemy. This means that there is a 50% chance of losing your cavalry or hero NFTs due to death by injuries. However, the longer you stay in the battle, the less likely you will get ambushed by a strong enemy when retreating. For every day after the third day of staking, the chances of losing your NFT decreases by 5%. And then they have a breakdown of the percentage based on the number of days that pass. Now here they have a breakdown of the buy and sell fees. So there is a 10% buy fee and a 10% sell fee. And they say the buy and sell fees prevent crazy swing trading from large traders. It keeps the liquidity pool healthy, and the fees help build the treasury, which supports the roadmap, marketing, and development, which in turn supports the project health and therefore the holders of the token. And then they have a section where they break down the placement and utility of the trading fees. I'm not going to go through all this. You can come here and check this out for yourself. Now, this is interesting in their token allocation. So it's worth noting that 0% goes to the team. So unlike many other protocols, none of this is going to the team. It's all going directly back into the protocol itself. So that's very cool to see. And the same applies for the private sale fund allocation, 0% to the team again. Now they do have automatic burning. All Fortuna used to buy rations will be immediately burned. On top of burning from external revenue streams, this will significantly curb inflation starting from day one of the protocol's life. So that is also something I really like to see. That's going to help counter inflation and keep the supply and the price more stable. Now here's some interesting information about the treasury. It says in most protocols, the treasury will be investing elsewhere in order to generate revenue for the protocol. This puts the protocol at the mercy of other protocols, meaning if the other projects crash, so will the treasury. However, Fortunas Finance's treasury will mainly consist of BUSD collected from taxes. And then they have a breakdown of how the BUSD collected will be used. And then they tell us, on top of our super slow inflation rate, this will allow the protocol to pay back holders while keeping the price of Fortuna healthy for years to come. Now here they tell us, unlike other protocols, Fortunas Finance's smart contract will never dump on holders. Most protocols will sell the tax collected from fees into stablecoins to fill the treasury. This will cause the protocol to consistently dump on holders, giving the protocol a permanent sell pressure. However, Fortuna's finance treasury will only consist of Fortuna tokens. This means that the protocol will not have a built-in dumping mechanism in its smart contract. The developers will only sell a portion of the Fortuna collected in order to fund operations and marketing. This will be timed strategically to prevent dumping on holders and harming the protocol. Then they tell us that this will also allow Fortunas to be self-reliant. It means we do not need to rely on other protocols to grow. It also prevents the protocol from getting harmed in a black swan event, such as the depegging of a stablecoin. And here they give us a little bit of information about how the pairing of BUSD instead of BNB in the liquidity pool helps this protocol to be more resistant against volatility. For example, they tell us that BUSD is one of the only stablecoins that is 100% backed by reserves held in either or both fiat cash or US Treasury bills. It is not algorithmic, and one BUSD can always be exchanged for $1 on Binance. And with an extremely high volume, along with the fact that it will never depeg, BUSD remains to be the best asset to pair Fortuna tokens with to ensure a stable and safe price. And so there you have it, guys. That is what Fortunas Finance is all about. I think this is a very exciting project. And if you want to check it out for yourself, I'll leave a link under the video where you can go to their official website and their white paper. And here in their white paper, they have links to all of their socials. So they have their Discord, Twitter, Telegram, Medium, YouTube, and Instagram. And you can get involved there as well. So if you got value from this video, do me a favor and leave a like on the video and subscribe to the channel where we talk about all things DeFi and crypto. And feel free to leave a comment down below in the comments section. Okay, we'll see you guys in the next video. Cheers.